Imagine buying a $5 coffee with your credit card. It feels like a tiny purchase. But what if I told you that millions of small purchases like this help? Banks earn billions of dollars every year. The surprising part is that most of this money doesn't come from rich people. It comes from ordinary people making everyday purchases. So how do credit cards really make banks so much money? Let's find out. Why credit cards exist. Many people believe banks make money only when someone forgets to pay their credit card bill. That's true, but it's only a small part of the story. Every time you swipe your credit card, several companies work together to process that payment. The bank pays the store immediately, then you pay the bank later. This system makes shopping fast and convenient. But behind the scenes, banks have created one of the most profitable businesses in the world. As the famous investor Warren Buffett once said, "Price is what you pay, value is what you get." Banks understand the value of convenience better than almost anyone. Here's the first secret. Every time you use your credit card, the store pays a processing fee. This fee is called the merchant fee. Usually, it's around 1% to 3% of every purchase. Imagine a store sells the $100 product. The customer pays $100, but the store may receive only $97 or $98. The rest goes to banks and payment networks. Now imagine billions of purchases happening every single day. Even tiny fees become billions of dollars every year. That's why banks actually want you to use your card as often as possible, even if you pay your balance in full every month. Now comes the biggest money maker, interest. If someone cannot pay their full credit card bill, the remaining balance starts growing. Many credit cards charge very high annual interest rates. A small unpaid balance can become much larger over time. This is where banks earn enormous profits. Psychologist Daniel Kahneman, who won the Nobel Prize for his work on human decision-making, said, "We can be blind to the obvious, and we are also blind to our blindness." Many people focus only on today's purchase and don't think about tomorrow's interest. That's exactly why credit card debt can grow so quickly. Part 4. Rewards aren't really free. 3:24:20. Have you ever received cashback, airline miles, or reward points? They feel like free money, but are they really free? Not exactly. Banks encourage customers to spend more because more spending creates more transaction fees. Some people even buy things they don't really need just to earn rewards. The rewards are real, but the system works because many customers end up spending more than they planned. The bank wins when spending increases. So, how do credit cards secretly make banks billions? First, they earn merchant fees every time you use your card. Second, they earn interest from people who carry unpaid balances. Third, they encourage more spending through attractive rewards and offers. Credit cards are not good or bad by themselves. They are simply financial tools. If you always pay your balance on time and avoid unnecessary spending, you can enjoy the benefits without paying expensive interest. But if you spend more than you can afford, the system starts working against you. So the next time you pull out your credit card, remember this. The smartest users don't avoid credit cards. They learn how the system works and use it wisely. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications for more simple finance videos that can help you make smarter money decisions. Thanks for watching, and